I know a lot of people out there who are traders probably do not know much about range-based charts, but I believe they are some of the better charts to actually trade. I've been trading since day one, and maybe it's just a personal preference for me, but I think to the eye that they're a lot cleaner when you can actually find and identify supply and demand setups, or maybe even support and resistance or liquidity grabs. For all those that trade a variety of different strategies, I just believe that the cleaner the chart looks to the eye, the easier it's going to actually be to trade. So when it comes to finding great quality setups, we're talking about high probability ones. I don't like to see where the market is making a bunch of wicks, and all those short and long wicks clustered around certain areas on the chart tend to kind of, I guess, personally mess with my eyes in a sense. And because I like to see where the high and the actual low of a swing is distinctly identified and specific. Okay, so that's why I trade range-based charts, and I like trading them as well, is because unlike time-based charts. All right, and there's nothing wrong with those. If you trade 5-minute chart, an hour, the 15-minute chart. Looking at time-based charts in general, because you do have an open and a close of a candle, and it's all derived by time, right? With range-based charts, they're actually calculated different. If you have experience in looking at these type charts, what you'll notice is that they specifically do not move much if there's not much volume in the market. So to me, and what most traders should identify, is that volume is everything when it comes to trading. We have where the market may get volatile because you got buyers and sellers kind of fighting amongst each others, and so you'll have when the market is very erratic, but in which I tend to kind of wait for the pace of it to slow down. But what I'm really trying to say is that the on range-based charts, volume is what kind of drives these charts as far as movements, whether we see big push to the upside or big push to the downside. So that's a very important factor for me when it comes to trading range charts. I like to be able to see, if I'm looking at a nice demand area that I mark up off my higher base 120 range chart, I want to be able to identify that movement on the chart. And that kind of lets me know that, definitely volume is there and is pushing the market. Okay. So, and sometimes on a range charts, you'll see where maybe unlike time-based charts, where you'll see movement, okay, because the candles are closing every 5 minutes if you trade off of a 5-minute chart. And vice versa on a range chart, you may just kind of see where it's kind of moving sideways, because there may not be a lot of volume that's actually pushing the market or driving the market. So it may kind of shoot sideways for a little bit. But what I wanted to actually share with you today also is that I personally find range charts to be a better means to seek profitability, because I believe just by trading range-based charts, there's more opportunities. I think the setups are cleaner to the eye, but I believe that they're more profitable than trading time-based charts. And you may be asking, why am I actually saying this? And maybe you don't agree, and that's fine. We all can have our opinion about things. Maybe it's because of the fact is I've been trading these type of charts for years, and I believe they provide an opportunity of multiple setups in one session. Now, I hear people that do trade and know people that trade time-based charts, and they have to look amongst a variety of different instruments to trade when it comes to time-based chart, because they may not get a clean supply or may not get a clean demand set up, and so they have to kind of start using maybe possibly other strategies, whether it's support and resistance or looking for liquidity sweeps or grabs in the market. With range-based charts, I can almost on the daily, find multiple setups, at least one, okay, at least at a minimum of one, but most times you can find 2 or 3 setups. All right, but when it comes to marking off the higher base charts at 120 range, if I'm waiting every single time for the market to tap one of those zones, it may take some time. I'd have to be patient about doing so. But the key to it all is taking the trade setups around market structure, meaning if the market is making higher highs and higher lows and we're breaking structure to the upside, then I'm only looking for demand, and then vice versa if it's moving to the downside. So what I want to show you on the charts here is just to let you know and show you that every single day there is going to be opportunities. This is just the NASDAQ, okay, futures, and maybe you trade the micros, but trading range-based charts, you're going to find multiple opportunities in which you can take trades. Now I would be very selective in the number of trades you take. Like most times, I'm looking for one and done, or at least a minimum of 2 trades a day. Okay, I wouldn't start packing on, X amount of trades. 5, 6, 7 trades, because the more you spend time in the market doing so, you're going to decrease your means of consistency overall, okay, and your profitability. And consistency is everything, because you want to prove to yourself that one, your strategy works, and that you are sticking to a regiment trading plan. Okay, if you say that you only want to take 1 or 2 trades a day, stick with that. Even though you may see other beautiful setups that may come about, stick with your trading plan. So that's, for me, my consistency and profitability has grown over time, is because I stick with the plan. All right. So if you do so, you'll see that every single day, every single week, you start to see your numbers start to compound and grow on your account. Now, for example, when I talk about market structure and using range-based charts, just quickly to let you know, like, if we're breaking structure to the, say, so we had this run to the upside. I'm talking about the last few days. Had this run to the upside, and then the market shifts and start breaking structure lower to the downside. I'm not going to be so much interested in trading zones that may be resting below, especially if we're starting to break structure lower. Okay, and the reason being that those zones could be older zones, but the key to it all, and the most important fact to point out, is that if we're breaking structure to the downside, so, and I show this time and time again in examples, just an illustration right here. If we're doing something like this, and the picture is being painted to the downside after we've had this trend, say, to the upside, okay? So we made a low here coming down, made a lower high, and then we're breaking structure lower, breaking below this area here, and then maybe having a structure break to the downside, breaking through this area structure right here, then we are definitely moving to the downside. So if we make a low and a lower high and break structure, that's really like the first sign in this case here of like a bullish, not bullish, but a bearish run to the downside. Let me do away with this right quick. And what happens then is that if we're doing that, then I would be more inclined to look for opportunities to go short. So if we're breaking structure to the downside right here, right, we got to push down. I would be interested if this was a high probability zone with the gap resting back here, right here at this zone right here. So if there was a gap at this zone right here, and this was a high probability zone, we had a breaker structure, come pull back, I would be more interested in taking this trade than possibly this trade down here. Why? Because this when we got here and made this high, then we started breaking structure lower. So it's starting to move lower, and we're following the movement of structure back to the downside. And then the market comes back up, and then we break structure again, pushing lower. I'm still interested in actually looking shorts. So anything below, once we start breaking structure lower, I'm going to be more interested to looking for supply setups to go short versus looking for demand areas below. You got to follow structure. Whatever's currently going on with the structure of the market, trade based on the movement of what's, price action based on the movement of what's actually taking place with the structure of the market. The market does get here and it does reject off of this, demand zone. But one of the reasons why more likely probably it definitely rejected here, because it was at 20,450, which is a half number as well. So you got multiple means of confluence. Yes, you can definitely entertain the interest of taking that trade there, especially when you have a half number or a round number matching up with a high probability demand zone. But again, because the structure is showing me we're moving to the downside, I'm more interested in taking shorts at this time until we start breaking structure basically above. So where I show that diagram where we're making, a low, a lower high, and then breaking lower, and the market not wanting to go back up and push any higher, well, it's in reverse of down here. We've made this low, the market pushes up, pulls back, and then we're breaking structure above here, okay? And then it pulls back to this key area of demand. I'd be interested in taking a nice setup going long, because now we are shifting and starting to make higher highs and higher lows, and not attempting to want to take out this identified low right here. So we pushed up, we're breaking this area structure here, we get a pullback, and this is a good area of demand right here. Is a let's see here, let me take a look. Okay, now we don't have a gap right here because this actually came back. So this is still a demand area, but it's low probability. But still, if it's rejecting and you get the rejection off the lower base chart to take the trade, you can definitely do so just as well. But I'm just here to show you that there are opportunities, multiple opportunities throughout many sessions. And people always ask, traders ask, if I do not or cannot find a 120 range demand zone or supply zone, meaning the market doesn't tap into one of those zones off the higher base chart, can I like scale down to the 24 range or lower base chart and trade? Yes, you can. You will find multiple setups on a lower base chart like a 24 range chart, but you want to follow the structure of the market. So if we were once bearish here and the market was breaking structure off the higher base chart, then be looking for opportunities to take shorts in looking down on the lower base chart following structure just as well. So if the market is breaking structure on a lower base chart and pulling back to a key area of supply on the 24 range, then trade going short until you start to see some reversal in the market where the market is making, like right here, a low, highs, pulling back, breaking structure, and then it continue moving to the upside. At that point there, you definitely want to be looking for demand setup. So what I'm trying to ultimately say is that follow the overall movement, the structure of the market, okay? If the higher time frame is bullish, look for higher highs and higher lows where structure breaks to the upside on the 24 range chart. And then in reverse up if it's bearish, okay? If the higher time frame is bearish, then look for it on a lower base chart if you're looking to take trades, which you'll find multiple setups. On a lower base chart, look to take trades where you have lower lows and lower highs being broken to the downside on a lower base chart. And you'll find plenty in multiple ones just as well. I'm just showing you from a higher base chart that when the market does tap into these higher base zones, that they stand out. They're very impactful, and the market does react at them. Even in this case here where the market was making higher highs and higher lows to the upside, pulls back, makes a break structure here to the upside and taps into this supply area right here. Just be mindful because now we're breaking structure back to the upside. Yes, this is a valid key area of supply right here. But as you see, yes, it rejects it, pushes down, but we don't make a new low. All it does is make a new higher low just to break structure back to the upside, taking out this high right here. So you got, and this is a significant high right here, okay? A major swing right there. So you have to be able to see things like this. Follow the structure, take the trades in the direction of structure, okay? Don't go against it, okay? Like this supply setup right here. Could you go short? Yes, but always think in your mind, if structure is now to the upside movement and we're tapping it even into a higher base supply zone, which it can reject, you still need to be thinking that this is going to be short-lived. If you trade it, get what you can get out of it, scalp it, and then just be looking for further setups to the upside to where, because we're making higher highs and higher lows to where you can take a nice demand setup. And that's what we did when we were pushing to the upside, continue after we rejected this area here. Yeah, it was a nice rejection here, but then it pushed up to the upside right here. You pushed up, pulled back, and then it moved higher. So the reason why I'm saying that, to me personally, range charts, you can have an increased sense of or more profitability because you have more setups that are going to unfold. I wouldn't start, scaling down to too low of a base of a chart or time frame, because then it's going to start getting real noisy for you, all right? But you're going to find multiple setups definitely when you're trading the NASDAQ. I mean, you're going to find setups throughout the day. You just got to be mindful of them. And, some people will say, well, I couldn't find any setups. Yeah, maybe you're not understanding structure the correct way. And then like right here, we made this high, we broke this area of structure. We continue pushing up, took out this major high right here, major structure break to the upside. But then it starts to do what? Topple to the downside, push down, pull back. We got the first low here, lower high, break structure, okay? Key area, I talked about this in a prior video. This was right at 20,700 and the market just shot to the downside from there. Why? Because structure is now moving to the downside, pulling back to a key area of supply right here. And this is a beautiful area of supply to take a trade from. Also, just as well for those that may trade or use the volume weighted average price indicator in your setups or your trading. Look, I mean, when we started breaking structure here to the downside and we pull back, we broke slightly above the VWAP back, but we're at it in the key area of supply and a round number, which gives you multiple areas of confluence. The moment the market breaks back below, if you trade a higher base chart, or even if you scale down to your lower base chart to find a setup, once it starts breaking back below that VWAP, we were already bearish. Okay, we tapped back into confluence there on with a supply zone and at the 20,700 number, and it just moves to the downside. So, you know, if we are following structure to the downside and we are under the VWAP and it's pulling back to key areas of supply, or in reverse of, if we're moving higher and the market is breaking above the VWAP and we're breaking structure higher, then you can look for pullbacks to either A, supply setups going short below the VWAP, or B, demand setups above the VWAP, okay, and do that. Like if we're moving lower right here, I had this demand, this supply zone marked off, but it never came back to it. It's kept pushing lower, so it pulled back, broke structure. We made a new lower high here, pushed down, pull back here, and then moved lower, as you can see. Okay, these are nothing major as far as areas to trade from. Pulls back, break structure lower. This here is another supply area to trade, but the market just kept pushing higher. Lower when it started trending and pushing lower to the downside. I mean, it really didn't start pulling back to any key areas. But what I'm trying to point out is that we were below the VWAP from one session to the next session. Pull back, broke more structure, and then it just kept pushing to the downside. You can see, but it never pulled back to really any key areas of supply. Into the 31st, okay, which was last Thursday, until I believe it got down to, let's see, like right here. But let's take a look at this. So it pushed down here, pulled back, broke structure lower, and then this structure break here was around 10:30 on the 31st. It didn't come back to the supply zone right here until like almost 10 o'clock, 9:50, 10 o'clock on Friday, okay, which was NFP. Now, I mean, to be honest with you, if we follow structure once again here, right? So we started moving back to the upside here. So it pushed down here. We didn't technically make a new low, meaning a break and close of a candle to the downside. So we broke this area of structure right here when we started moving higher. Okay, we took out this area here and this small area here as we move higher to the upside. So at that point there, we're now making low, a new high, and then a new higher low to break structure above back to the upside, tap it into the supply area. Again, be mindful if the shift of the structure is starting to move back to the upside and we're tapping into, say, key areas of untapped supply to the left-hand side of the chart. Can the market hold there? Yes, but it may not hold for long because now structure is moving back in the opposite direction. It's shown its hand to where it's now making that let me show you here. The same diagram I'm talking about where I showed you, I think I showed you we're coming from the upside, now we're going to the downside, okay? And now we get the first move to the upside, high, higher low, breaking structure here, breaking structure here. This is a reversal sign. So if there is a supply area sitting over here, say for example, right here, I'm going to be more inclined to take these demand setups in the supply area. I'm not saying that this can't reject and give you a few points here. Be mindful if you are basically taking counter trend trades in counter trend to structure the market, that the setups or the moves may not be long lasting. You may scalp them for 10 points or so, whatever the case is. But as you can see right here, it rejected it and then it kept moving to the upside. Why? Because of this right here. See the diagram here? Low, lower, high, lower, low, high, higher, low, breaking structure to the upside, tapping into supply. It's going to keep falling through because now structure is moving to the upside as it is right here. All right. So that's what I wanted to point out to you, is that there'll be multiple setups that you can find in trading range-based charts. Just be key to what you have identified when it comes to structure the market. I talked about structure being, it trumps all, it is king to everything. And as long as you're trading in that direction with it, you'll find yourself taking some better high probability setups and increasing your profits in the long run. But that's all I want to share today for all those that maybe are converting and thinking about taking a look at the range-based charts, because I've had tons of people say, thank you for sharing and showing range-based charts. Many of them didn't even know what range-based charts were. But again, if you're trading something that's working for you, just stick with it. If you trade time-based charts or tick or volume, then just stick with it, okay? I'm just here to show you how I trade, supply and demand in a sense, and I'll talk about that across the platform here on YouTube, on the channel. Anyone interested about the strategy and how I trade supply and demand, please spend some time watching the videos. And maybe even sign up for the elite membership. It's only $6.99, and that's where you get all the additional private video content surrounding all the uploads and postings of the trade breakdowns that I've covered. The trade breakdowns break down these setups so that you understand everything about the strategy in as a whole. Okay, stop loss placement, profit target areas, market structure, what I was thinking leading up to a trade, why I got into the trade. I give the full rundown, and there are, I don't know, probably there's tons of those setups on there. But you also get the video playlist and a great video that I did covering in depth on market structure, like it's like a market structure one-on-one video. So for $6.99 a month for anyone that's interested, the link is right down in the description portion of the video. Scroll down, you'll see two links there. First one's the Discord. Second one is the link that says become an elite member. Once you click on that, two tiers will pop up. Make sure to choose the second one for $6.99, and it will give you direct access to all that video private community, all that additional video content. But outside of that, I appreciate everyone who tunes in. If you're not a current subscriber, please take the time to go ahead and sub by clicking on the subscribe button. Make sure to turn your post notifications on so you don't miss any of the uploads. And last but not least, please drop a like right now. Click on that like button if you do not mind for me. It helps the channel out, helps the algorithm out to expose the channel so that other people can, gain access to information like this and understand specifically about market structure and the strategy of how I trade. So, and I want to see everybody become profitable. It just takes time, and you have to kind of educate yourself on the concepts. Other than that, I appreciate you tuning in. Take care. I'll see everyone in the next one. Have a great rest of your weekend.